All right, here we go. It is Friday, March 21st, 2025. As I shared last week, I've got my iPad here with some bullets, but I will generally just kind of wing a lot of the stuff here. So um, let's just jump right in. There was a lot of challenges, I guess I should say, that I had to navigate this past week. And so I'll start with a quick recap. I think where I left the video off last week. We were in the process of purchasing two new short-term vacation rental properties where we live right now. We were going to purchase them with two new HELOC loans as the down payment, which technically meant we weren't going to be using any of our own money, or at least not any of our cash, for any of this, which is exciting. Um, I had completed an initial version of my resume, right? And I was just starting to search for a new job. Of course, I was impacted in my current job, and yes, at this point, I've got a pretty pretty long career. I've been in my industry for about 25 years. I'll probably touch on that a little bit later. Um, we had some issues with our Las Vegas rentals, right? So we've got four new Las Vegas long-term rental properties, and we had some issues with tenants paying, and it's our first time having long-term rental properties. But we actually needed to get a new tenant for the fourth property. I'm also working with some investor partners slash friends on a new boutique resort type development where we're actually purchasing, and it's a property that's already commercial use. They've got a big building on it that's been used for event centers, but it hasn't been used in a really long time. It's a super old property, and currently um, people can bring their RVs and park them on there and just stay. But we are planning on redeveloping that property. So it's a very big project. Um, and I think I touched on just briefly that the overall stock market entered correction territory for the first time in I think a while. The S&P 500 was down about 10%. So um, let's knock out some of the easy items first. Um, Okay, stock market. So the stock market, it's a little changed, right? We've had another 5 days of trading. Um, little change. Just to give a quick sort of, I guess, insight into what probably drove it, right? I do tend to watch CNBC, so hopefully this will be around by the time you guys are older. It's been around forever, but anyways, I tend to watch a lot of that stuff, and you get a lot of analysts and other investors and other people just kind of sharing sentiment of what they're thinking. And we did have Donald Trump elected for the second time as president. He's been in office now for coming up on a couple of months. And the correction is largely just due to a lot of um, a lot of volatility. It's just a lot of people are very anxious and they're not really understanding sort of directionally or what types of decisions are going to be held long time. So anytime there's uncertainty in the market, a lot of investors tend to pull money out, or sometimes they'll pull them out of certain areas of the market and reinvest them into something that might they feel it might be a bit more stable. And so the big thing that's going on right now, and it's been going on, is the tariffs. Right when Trump was running for presidency, he announced he was going to have a lot of tariffs for a lot of countries, all countries, including Mexico, Canada, China, and Europe. And so now that he's in office, he's talking a lot about tariffs, but there's a lot of back and forth. He'll come out one day, say, here's what I'm doing with the tariffs, and then he'll talk to a country. They'll try to negotiate. He'll come back the next day and say, okay, we're going to pause this or pause that, or make some changes. And so it's all of that volatility and uncertainty that's largely causing the market to take a big dip. So no real big changes there. Um, Trump has said that April 2nd is going to be the day that he makes some additional big time announcements on that. And so I think the market is kind of waiting to see what happens. And come April 2nd, if there's more certainty in terms of what's going to land, then maybe people will be a bit more optimistic and put some more money back in, and we can see the market go up. If people either don't like, I shouldn't say people, I guess if investors don't like directionally sort of what's landing or the decisions being made, then we could see the stock market, dip a little bit further. So we'll have to wait and see. On the job search, so I haven't really searched for jobs. I'm still kind of going through that in my head of like, do I really need another job, right? And then even if I say yes that I do, or that I should get another job, I still have to be prepared for the fact that like it might not be that easy for me to get another job. And so how do we plan around that? Um, so put a couple of feelers out. I pinged a couple of people. I had a call on Tuesday with a recruiter who actually works for an agency where they place people like me at startups and companies. And so that was just more of a call, get into a little bit of my background and what I'm looking for. And then, if there's anything that comes across her desk that she thinks I might be a good fit for, she'll reach out and let me know, and we'll have some further conversations. But it wasn't really an interview. I just wrapped up a call a couple of hours ago with somebody that I worked with. So the company that I was just let go from, this person was there before I joined, and they were the head of the organization department. About I think two people down from the CEO, and I mean we're talking an 80,000 person organization, so it's a large company. Well, she left, and she's now the head of the department at another company that's about 10,000 people or so. She didn't have a job, but we just wanted to connect. I'd reached out to her, and we just chatted for a few minutes. She did give me the emails and the names of a few other people that I know by name, uh, that are also sort of leading recruiting at some of these other companies. And so I'll go ahead and probably reach out to them next week. So this feels more like it's networking, and we'll sort of see what happens. Um, okay, on the Las Vegas properties, so we did get our fourth tenant. Jazzy was working on all of this, or at least on three of them, and the two tenants where we thought we were going to have some challenges getting the actual rent. We got that solved, and so I think we're in a good spot now. We got four properties, right? Like I said, it's our first time with long-term rents. All four are in Las Vegas, and we don't live in Las Vegas, so right. So it's not like we can just go and show people properties whenever we want. But either way, they're all in for 12 month uh, leases. So hopefully that will sit quiet, and we'll continue to get paid rent, and we'll be good there. But we'll see what happens. Um, okay, on the boutique resort. So we had a couple of challenges. One is when you are when you're in the mountains, which is where this resort is, right? Then you're not necessarily on county sewer or even county water sometimes. And so this property that we're looking at, it has a septic system, right? But if it's going to be a resort, and this is not going to be a like hotel with one big building, this would be a lot of different types of units that people can rent, right? And so we did a lot of different setups for the septic, and for what it is today, the septic system doesn't support what it is we want to do, which means we're going to need new septic plans. We're going to need an engineer to come in and draft all these plans. Then we're going to have to take that to the county and get that approved. And from some of the initial conversations we had, we spoke to a couple of different septic people, and they told us like, nah, we're not sure that your plans are going to get approved. We're not sure there's enough land acreage here for you guys to safely do what would be required. So that was a big challenge, a big concern for us. I did just get an update, like literally 10 minutes ago, from one of our partners that went out there and met today with an actual engineer. They walked the whole property, reviewed all the plans, and it sounds like the septic won't be an issue. This person will more than likely be able to draft up plans that we can take to the county, that the county should approve. So it sounds like one hurdle has been cleared. The second big one is the property today operates in a way where they're able to use this large building for events. They've got another building where they're only able to today rent it out as like Airbnbs. And then they do have trailers that are able to come in and just park and stay overnight. So when we pinged the county, we initially just said, hey, look, we get that it might take a very long time. But what we heard is it's probably going to take 6 to 8 months for us to get approvals for the new plans that we have, the way that we want to develop and modernize and whatnot. But the initial ask is just, hey, can we at least keep using the property as is today, right? These people that we're buying it from are using it in a certain way. There shouldn't be any problem if we just take it over and use it in the same way that they're using it. Well, the county got back to us, I think earlier this week, or it could have been late last week too. Maybe I didn't mention it, but they basically said, no, we're not just going to approve something. You got to go and get new permits to use it as is, which is kind of weird. But anyways, so now we're going back to the county. I actually called the county just yesterday to see if I can get a hold of somebody and get an update. My other business partner also called again today just to check in. And it sounds like we're getting the same message, but they're working on it. We're hoping that by Monday, they're going to get back to us and tell us what we can use the property for today, right? So without necessarily, hopefully without having to get additional permits. Because if we can't use it the way they're using it today, well then, we're in escrow right now. We've got less than a month left on the contingencies. And if we're not going to be able to use it, then we're going to have to renegotiate with sellers. That would be potentially a big problem for us. So more to come on this one. All right. Okay. Now we're getting to the meaty stuff. So on the two new STRs, the short-term rental properties we're buying, we're in escrow. Contingencies need to be removed. And contingencies basically just means that when you enter into escrow when you're buying a property, usually escrow period will be 30 days. That means I go and say, hey, I want to buy your house, and you agree. Great. We both sign after we agree on a price. And included in that will be an escrow period. And that would be 30 days. So from the day we both agree that we're going to buy and sell the property, we sign. And then 30 days later is when, if I'm the purchaser, I have to give you all the money, right? And if I'm not paying cash, then I'm going to use a lender or whatever, and they're going to come up with money, but they need to give the money to the seller, right? And so the tricky part there is you got to go and work with, and in our case, you're working with a lender to make sure that everything gets done in time, right? If we can't get our money together, sent to the seller in time, then that jeopardizes the loan. And also, when you both sign, you agree initially that, hey, if I'm going to come in as the purchaser, then I also agree that I'm going to put up a down payment, right? And usually that's some sort of a percentage of the overall sale amount. And so in this case, the first property that we're in escrow on, the price we agreed on it's $649,000. The down payment we agreed on was $7,500. The second house we're in escrow on, that one is in escrow at $500,019, and the down payment on that one was $5,000. So we entered escrow, I think, I'm trying to remember, was it last week or it could have been a couple of weeks ago? Anyways, and the down payments have already been shared. Well, there's a contingency period within that 30 days, which actually sometimes is half of that time. So your escrow time period could be 30 days. The contingency period could be 2 weeks or it could be 3 weeks. That's how much time I have to go and review the property in detail. That means I will hire somebody to go do a roof inspection. I'm going to hire somebody to come in and do a pest inspection. I'm going to hire somebody to come in and check on the structure, check on the exterior, the property, the plumbing, like whatever you name it. You need inspectors to go in there and check to make sure that, like, hey, is this house actually in the shape that you think it's in? And a lot of times you find out that the roof is a little bit old and maybe there's a leak somewhere. That gives me an opportunity to go back to the seller within that contingency period and say, hey, I know we agreed on this sale price, but based on some of these issues we found, I'm not cool or comfortable paying that. So, hey, you're going to have to knock off $10,000, or you're going to have to give me a credit, or you need to fix it before escrow is up. Well, we now have this contingency period coming up. I got another email today from one of the people I'm working with that basically says, hey, you got to sign for removing contingencies. Once I sign that we remove the contingency, I can't back out. If I can't back out and we're past contingency, then the big thing there is that even if I decide to walk away from the property for whatever reason, or I can't get the funding for this, I lose the down payment, right? So that's a pretty big deal right now. That's something that I got to figure out. And I think I mentioned last week that for the second HELOC I was working with, the lender, right, for the home equity line of credit, and remember, we're doing a home equity line of credit. We're borrowing money out of one of our investment properties. That generally isn't always easy, but we got the approval. So the first HELOC was approved. They already wired me the money. So now I got money sitting in a bank account ready to purchase one of these homes. But I still need the lending for the actual mortgage for the rest of this house. The second HELOC looked at my pay stubs and saw that it said notice period, notice pay. So then they asked me and said, hey, why does it say notice pay? Are you on leave? Are you not working for the company? When are you going to return to work? And I'm like, okay, how do I answer that? Because I am not going to be returning to work, right? I'm in a notice period while I'm still employed, but I'm not working. So that kind of presented itself with a nice little challenge of, A, what do I say? Interestingly enough, the broker that I work with, that I have a relationship with, this guy's amazing. And it's I guess I should call him a broker, but it's also a direct lender. He works for a big company and they have a lot of our mortgages. They've financed a lot of our mortgages, if not all of our mortgages. And I was able to get on the phone with him and actually explain to him exactly the situation that I'm in. And he's like, ooh, well, if that HELOC can't get approved, I don't know if I can get both of those mortgages approved for you. So that's the situation we're in right now. That's what I've been trying to deal with this week. The problem with it's not just that it shows up on the paycheck, right? It's the employment verification. So the HELOC, the people that were going through and trying to get the HELOC approved for me, when they saw it on the paycheck, then they called my company. And that phone line says, yes, this person is employed. Yes, they make this kind of money and they're on leave. And that's where they're going like, well, we can't do that. So when I talked to my broker, he's like, hey, well, you need to respond to the HELOC and let's see what we can do. I will try my best to work on the side to figure out if there's something we can do. Interestingly enough, I replied to the email for the second HELOC and I just said, hey, who told you I'm on leave? I just asked a question. And then I said, I'm still employed by the company, still getting paid. I can continue to send you paycheck stubs. I can send you employment verification if that's what you need. Well, apparently they took that. And just yesterday, I got the email saying I was approved. So the second HELOC has now been approved, right? So, and I just did signing on all of those documents yesterday. I'm assuming probably Monday, Tuesday, they're going to wire me a big amount of money. And that's going to be the second down payment so that we can actually go purchase both these homes. I just talked to my broker guy yesterday after the HELOC got approved, and he's like, I can't even believe they got that approved. We are getting the same message from your company when I call the number that says you're employed, but you're on leave. The problem with that is they're not going to be able to use that. He doesn't believe he's going to be able to use that to get the loans approved. So I can't remove the contingencies on both of these properties because I don't know if I can get the loan and I'm not going to risk the money. So I'm in a very, very tight spot, which means by Monday, I think I'm going to have to make a decision. And those decisions are either A, pull out of those, or renegotiate and ask for additional contingencies, which sellers usually don't want to hear. Not sure if they have any, they could just walk away and try to sell to somebody else. That's also not a good thing for them. But I need more time to figure out how I'm going to be able to get the loans for these houses. So that brings up one sort of interesting thing that I'm learning, and I'm trying to read a little bit more about it now. So I'm going to have to look at my notes here. There is something called SDCR. That's a different type of a loan. It stands for Debt Service Coverage Ratio. These are loans where instead of using my income and my employment verification so that I say, hey, I can go ahead and buy this property and the bank is not going to worry that I'm not going to be able to pay, these loans are specifically only for real estate investors, okay? And they will not loan to you if you're planning on living in that home or if it's like a vacation home. No, it's only for real estate investors and it's only for investment type rental properties. Now, the interesting thing is these loans can be approved for both long-term rents and short-term rents. The way that they verify whether they believe it's going to be a good deal or not is, like I said, it's not about my income or my employment, which is good. It's about the rental income. Will this property actually make money? I read somewhere online, and depending on where you go, of course, if you're buying another investment property, so if you're buying like a multi-unit building or an apartment building, it's easy. Those sellers are going to have information they can share on, like, yeah, here's the rental income. And so I can use that to say, look, I'm buying a building that's already profitable or already generates a good amount of income. And you can see that the income is going to cover whatever it is I'm asking to borrow. Well, in this case, the two houses we're in escrow on, they're just regular houses. There is no rental income. So there is nothing that I can show or share with these lenders that says, hey, here's what these properties made in the past. So they will have to go on either their own sort of market, market research or market data, whatever they can pull. They'll come up with their own suggestion on, like, here's how much revenue we think this property would make. And then they'll come to me and say, okay, well, hey, if you're going to buy a house for $650,000 and you're asking to borrow, a good portion of that. So let's say I'm going to put 20% down, right? Then I think the total of that is I'm going to have to borrow like $520,000. They need to see that the numbers are going to make sense. Revenue, expenses, and all that. They probably have some sort of a debt to income ratio that they would use on whether they would approve something like this or not. Well, we have a lot of data. We have successful businesses out here. We've got a lot of properties that we manage. But I don't know if they're going to look at my historical data. They're probably going to have to find their own data. But anyways, that seems like something very interesting that we are just starting to look into right now. So I'm about to log off. It's nearing sort of late afternoon here. But yeah, lots of things that I got to dig through, and next week should be an interesting week. And maybe I'll add this too. If I don't get the loan, I just talked to Jazzy about this yesterday. The interesting thing is, now that I've got the HELOCs already approved, I technically got a bunch of cash that already came over. Not the worst thing in the world, but like, hey, I have these loans. I just paid to get these HELOCs. If I can't get a loan to buy these homes, then I have all this cash. Technically, what I could do is, and I have my brokerage account that I can also borrow from with very low fees. Technically, we might even be in a position where, okay, do I just buy one of these homes with cash, right? Of course, then I will have to pay back both of the HELOCs, but I was going to use it on two properties anyways. So I'm still going to pressure test some of those numbers to see how that's going to work out. But that is also a viable option. So lots to think through, not a lot of time. Probably by the time I record this video next week, we'll have made a decision and we'll know for sure whether we buy none of those homes, buy one of those homes, or maybe even find a way to buy both of those homes. If there is a way to buy both of those homes with one of these new SDCR, no, I said that wrong. SDCR, it's DSCR, debt service coverage ratio. Yeah, if I'm able to use that, what's stopping me from just picking up another two, right? So anyways, now the problem with those is because they're not standard conventional type of loans and they're real estate investor only loans, then of course I think the down payments sometimes have to come up. So we might have to put up 25% or 30% as a down payment, and the interest rates tend to be higher. And already with a standard conventional loan, I'm already looking at around 8%. So the interest rates goes higher, that's going to impact, the profit margins on these properties. So lots of things to go through. But either way, I am ready for the weekend. I'm playing in a tennis tournament tomorrow, this weekend, first tournament of the year. So we'll see how that goes. All right. Peace.